is to find the owner's equity. Or total equity, doesn't matter. The owner's equity, again, we can just put everything in brackets, but I want you to know the formula. So the owner's equity is the same as the statement of changes in equity. I don't know if you heard about this before. Yeah, so for you to find the owner's equity, you need the following. Let me know if you are ready. Firstly, we need capital. That's the first thing we need. We do have capital somewhere there. Can you see this capital?
Yes.
434 500. 434 500. Please, you must write this notes down. You need the capital given to you. You need to add any profit. Okay, before the order doesn't matter, but you can add profit for the year. I think we did make a profit. Remember up there, you go and take this profit, 86,600.
Okay.
Are you with me?
Yes, sir.
Yeah, if it was a loss, you will less it. But because we made a profit, we add it. So you take the capital at the beginning plus the profit that you made plus any additional capital. So if, let's say, for example, from the information here, they told you that you increased capital during the period, another contribution, you will add it. Are you with me?
Yes, sir.
Yes. And thereafter, you check if you've got any drawings here. Do we have any drawings? We don't have. So if we had drawings, you will minus it. Will you remember?
Yes, sir.
I repeat, capital plus any additions of capital plus any profit for the year. Can you see now?
Yes.
Minus drawings. Don't forget, because some exercises can have everything there. And then how much do we get?
We get 347,900.
347,900. Please don't forget that formula. It's very important. You okay?
Yes, sir. Just a little bit tired.
No, I understand. So I understand because it's too much.
Can continue, sir.
Now, under non-current liabilities, you need the following. You need long-term borrowings. And again, you must know this. Yeah, like as I said, the notes is what is your calculation. So long-term borrowings, you need any loans which will be paid. Let's say, for example, if let's say what is our year? Our year is, I think it's 31st of December.
Yes.
Let's say 31st here is 31st December 2022. It's our end period, and we started here 1st January 2022. So any loan that is not, let's say you are at the end here, this is the end. So you check if the loan cannot be paid within the next 12 months, that loan will not be long-term borrowing. So any loan that is going to be paid in the next 12 months is called what? Short-term borrowing. So the short-term borrowing must be deducted from the loan. Let's say, for example, here, the balance here was 200,000, okay, of the loan. They say 50,000 of this will be paid in the next 12 months. So you must know how much is going to be paid in the next 12 months. So obviously, if they are going to pay 50,000 in the next 12 months, you're going to minus what? 50,000. So the long-term borrowing will be how much? 150 is the one that you're supposed to write it here. So you must be careful. They will give you the information. So if they give you the loan, check the portion that is going to be paid in the next 12 months. Any portion, you must minus it. But in this case, we don't have any borrowings. We don't have any long-term loan. I don't remember having a loan here. They should have given it to us. Yes. So remember, anything that is going to be paid in the next 12 months, you minus it. And it will be part of the short-term borrowing. And the short-term borrowing will always be under what? Will always be under the current liabilities. Okay. So let me write it down so that in future when you see it, you know. So the short-term borrowing is the one that is going to come here. And who must decide? You are the one who must decide whether it's a short-term borrowing or not. How will you know? They will tell you that this amount of money is going to be paid in the next 12 months. So as long as it's going to be paid in the next 12 months, you will decide. Okay?
Yes, sir.
Yeah.
So if it's long-term borrowing, it's money that's not paid in the
It's
next
not going to
12
be
months.
paid. Yeah, it's the next, yeah.
Okay.
But if they say this amount is going to be paid in the next 12 months, take that amount and minus from the loan that is given to you so that it cannot be part of what? So you minus it, you're going to put it here. Like in that case, let's say we had like the example that I just gave you. So let's say your long-term loan was 200,000. I'm just giving an example, 200,000.
Yes,
and we said 50,000 is going to be paid in the next 12 months. I'm going to minus it as strict. Remember, we're just doing it for the sake of the exercise. I was supposed to have it here, and then here I was supposed to have how much? I was supposed to have 150,000 as my long-term. Can you see now? It's my long-term borrowing. Can you see now? I'm 150,000, for example. And then the same 150,000, because I minused it, this 150,000 is my
short-term borrowing.
I'm going to write it here. So I'm just trying to separate long from the short. Can you see? That's how I'll put it.
Yes.
I minus it here, I put it here. Remember, it's just for in case. I'm just showing you for in case. Don't worry about balancing this. I'm just saying for in case. I'll just leave it like this here. Can you see now for the sake of understanding, okay?
Okay, sir.
Trade in other payables. And there's a note, like remember here we had trade in other receivables. So we also have a note called trade in other payables. Let me just write it down. Again, there's a formula that we need to follow. Let me know if you are ready. No, I made a mistake here. Sorry. I made a mistake here. You know, this short term is not 150. It's this, man. Sorry. Do you understand what I mean? I wanted to say 50.
Okay. No stress.
The one that you minused here. Because this one is 150 is the long term and then 50 here. Sorry about that. I wanted to say 50, not 150. Remember, don't be confused. I just came up with the figure because this question doesn't have these figures.